Great. Good afternoon and welcome to the Banking, Commerce, and Insurance Committee. My name is Senator Julie Slama. I represent the 1st Legislative District in far southeast Nebraska, and I serve as chair of this committee. The committee will take up bills in the order posted. Our hearing today is your public part of the legislative process. This is your opportunity to express your position on the proposed legislation before us today. The committee members will come and go during the hearing today. We have to introduce bills and other committees and are called away for that reason. It is not an indication that we are not interested in the bill being heard in this committee. It's just part of the process. To better facilitate today's proceedings, I ask that you abide by the following procedures. The information is posted on the chart to your left. Please silence or turn off your cell phones. Move to the front row when you are ready to testify. The order of testimony will be as follows: the introducer, proponent testimony, opponent testimony, neutral, and then introducer close should they choose. Testifiers, please sign in. Hand your pink sign-in sheet to the committee clerk when you come up to testify. Spell your name for the record before you testify. Be concise. It is my request that you limit your testimony to 5 minutes, preferably less. If you will not be testifying at the microphone but want to go on the record as having a position on a bill being heard today, there are white tablets at each entrance where you may leave your name and other pertinent information. These sign-in sheets will become exhibits in the permanent record at the end of today's hearing. Written materials may be distributed to committee members as exhibits only while testimony is being offered. Hand them to the page for distribution to the committee and staff when you come up to testify. We need 10 copies. If you have written testimony but do not have 10 copies, please raise your hand now so the page can help make copies for you. To my immediate right, it's Monday, is Committee Counsel Joshua Chrysler. To my left at the end of the table is Committee Clerk Natalie Shunk. The committee members with us today will introduce themselves, beginning at my far left with Senator Von Gilleren.
Senator Brad Von Gilleren, District 4.
Ray Aguilar, District 35.
Senator Mike Jacobson, District 42.
Ballard, District 21.
Also assisting the committee today are our wonderful committee page, Quinn Eilers. The committee will take up bills today in the following order: LB 669, LB 674, LB 67, and LB 68. And with that, we'll open the first hearing of the day on LB 669. Senator Ballard.
Good morning, Chair Slama and members of the Banking, Commerce, and Insurance Committee. For the record, my name is Bo Ballard. That's spelled B-E-A-U, B-A-L-L-A-R-D, and I represent District 21, which is Northwest Lincoln and Northern Lancaster County. I'm here to introduce LB 669 at the request of the Department of Banking and Finance. As we all know, the department is the sole regulator of Nebraska's state-chartered banks, trust companies, building and loan association, savings and loan associations, credit union, and digital asset depositories. As part of its responsibility, the department is required to issue a written decision, including orders on many matters. The department often sets conditions in which the applicants or requesting parties must comply before they are allowed to proceed. For example, an order approving a bank or credit union application for a branch office may contain a condition that approval of the institution's primary federal regulator is obtained before opening the office. The department has followed this practice for many decades. However, in 2021, the court interpreted governing statutes to say that department authority is limited to only approvals and denials. LB 669 will provide clear authority for the department to set conditions on listing of financial institutions and their holding companies. As part of any orders, decisions, or determination that the department is required to issue under the statutory governing of those institutions. I'd be happy to answer any questions, but the director is behind me to answer more technical questions if you have any.
Thank you, Senator Ballard. Are there any questions from the committee? Seeing none, we will now take proponent testimony on LB 669.
Good morning.
Good morning, Mr. Director.
Chair Slama, members of Banking, Commerce, Insurance Committee, my name is Kelly Lammers, Kellylammers. I am Director of the Nebraska Department of Banking and Finance. The department would like to thank Senator Ballard for introducing LB 669. The Nebraska Department of Banking and Finance is a regulatory agency established by Nebraska law. Under Section 8102 of the Nebraska Banking Act, the Department has general supervision and control over banks, trust companies, credit unions, building and loans associations, savings and loan associations, and digital asset depositories. This catch-all statute was originally adopted with the legislature's recodification of the banking statutes into the Nebraska Banking Act in 1963. The department's statutory obligation to provide full supervision over banks, trust companies, buildings and loans, and savings and loans associations date back to the early 1900s, with supervision of credit unions added in the 1940s. Digital asset depositories came under our jurisdiction in 2021. Throughout the years, the department has used the mandates of general supervision and control of Nebraska financial institutions to place conditions on licenses and within orders or other documents approving applications and requests in the regular course of fulfilling the department's responsibilities. This practice has allowed the department to serve entities more effectively, more economically by getting licenses, charters, and decisions on matters such as branch office applications to entities more quickly. Without the ability to place conditions and licenses and orders, timeliness for applications would get drawn out until entities can fully pre-comply with necessary measures. Matters that fall under a statute containing a deadline for the department's decision may have to be denied if applicants are unable to be compliant before the deadline. Even though the department has consistently been issuing conditions and written decisions for years, the department recently was involved in a matter where the term general supervision was interpreted by a district court to not include the ability to establish conditions within an order. In short, the decision provided the department two options: approve or deny. Based on advice from the Nebraska Attorney General's office, the department is requesting this legislative change to make clear that the department may apply conditions in matters where the statutes require our approval. The department requested and received input from the Nebraska Bankers Association and the Nebraska Credit Union League in drafting the bill. Their assistance was greatly appreciated. The language in LB 669 is believed to be the most restrictive language possible in order to give the department the ability to fashion worthwhile conditions and applications for the benefit of the industry. The department believes the proposed amendment to Section 8-102 will allow the department to continue providing its supervised entities prompt and efficient service so that those institutions can more quickly attend to the business and customers' needs. Thank you for letting me speak on this important bill. Be happy to take any questions the committee may have.
Thank you, Director Lammers. Are there any questions from the committee? I've got a brief one just so that we're all on the same page here. Essentially what LB 669 does is clarify something the department has been doing for years. It came into question with the 2021 ruling, and now we're just trying to establish in the language the roles that you've already been taking on for the last several years.
That is correct. Yes.
Fantastic. That's my kind of bill. All right. Any additional questions? All right. Thank you, Director Lammers.
Thank you.
Additional proponent testimony. Seen,
He's small.
should really wave your arms or something.
Moving kind of slow today.
Good morning, Mr. Hallstrom.
Thank you. Chairperson Slama, members of the Banking, Commerce, and Insurance Committee, my name is Robert J. Hallstrom, Hallstrom. I appear before you today on behalf of the Nebraska Bankers Association to testify in support of LB 669. Director Lammers has, I think, completely given you the background on this case. There was a Lancaster County District Court decision involving a credit union that went to the heart of whether or not the department has the ability to place conditions on their orders. They had in that particular instance, and the court basically said, you can say yes or no, but you can't put any conditions on the order. We were glad that the department shared with us the original draft of the bill. We felt it was much broader than it needed to be to take care of the issue at hand, and the department has crafted the least restrictive bill that still grants them the authority to do what they always thought they could do, which is to place conditions on these types of orders. And we support the bill. Be happy to address any questions.
Thank you, Mr. Hallstrom. Are there any questions from the committee? Fantastic. Thank you
Thank
very
you.
much. All right. Good morning, Ms. Schroet.
Good morning, Chairwoman Slama, members of the committee. My name is Dexter Schroet, DEXTER I'm President and CEO of the Nebraska Independent Community Bankers. Just real briefly, we just want to get on record of supporting the bill. We thank Senator Ballard for bringing it and the department for bringing it as well. It's not often you have industry that supports a statutory expansion of your regulator's authority, but as Mr. Hallstrom just said, we already kind of recognized that authority was there. So we do urge the passing given the recent court ruling. So we urge the committee to advance the general file.
Thank you, Mr. Schroet. Are there any questions from the committee? Seeing none, thank you.
Thank
Additional proponent testimony? Seeing none, is there any opposition testimony to LB 669? Seeing none, is there any neutral testimony to LB 669? Seeing none, there are no letters for the record on LB 669, so Senator Ballard, you are welcome to close. And he waves closing. That concludes the hearing on LB 669. We will now open the hearing on Senator Jacobson's LB 674. Good morning.
Good morning. Well, thank you, Chairwoman Slama and members of the Banking, Commerce, and Insurance Committee. My name is Mike Jacobson, MikeJacobson. I'm here before you today to speak to introduce LB 674 on behalf of the Department of Banking and Finance. The bill is a fairly simple bill in terms of it is your classic cleanup bill, but there are a number of provisions within the bill, and so there'll be a number of pieces. Looking at the people behind me, I'm guessing there's a few of them here to speak on this bill as well. So I'm going to walk you through the high points, and I'll probably defer most of the questions to really the group that are here to speak on the specifics of it. This bill, as I said, was introduced is being introduced at the request of the Nebraska Department of Banking and Finance to amend provisions in the Nebraska Financial Innovation Act, as the director just mentioned, which was passed in 2021. The act provides for chartering, operation, and regulation of digital asset depository institutions and digital asset departments within banks. LB 674 proposes revisions to the act to improve consistency within the act and with other financial institution statutes and to make technical corrections. These revisions will provide, first, authorization for digital asset depositories to establish in-state branches as out-of-state branches are currently permitted. Updates to the application process relating to the filing of business plans and bylaws, the injection of additional capital, and charter issuance. A process for the substitution of securities pledged to the department by digital asset depositories in lieu of a bond. Authority for the pledger to collect interest or dividends on the securities, and assessment of a pledging fee. That endangering the safety and soundness of the depository is an additional cause for removal of digital asset depository insiders by the department. Clarification of voluntary dissolution and liquidation procedures between digital asset depository institutions and digital asset depository departments. And finally, it updates the definition of stablecoin, substitution of numerous references to the term grant of authority and the word charter, and textual and grammatical corrections. Because these are changes that we believe need to be done, LB 674 does carry the emergency clause for all provisions. I'd answer any questions you might have for me.
Thank you, Senator Jacobson. Are there any questions from the committee? Yes, Senator Bostar.
Thank you, Chair Slama. Thank you, Senator Jacobson. We worked on this legislation for a long time, introduced by then Senator Flood. And, during the committee hearing process, there were a number of individuals who were excited about this, excited about maybe creating enterprise opportunities in this space, as well as some current banks were also supportive of the idea of expanding into this work, although more quietly. Is there anything that you see in this that would slow Nebraska's progress on this front or prevent us from being a national leader in this space?
Well, I think probably the answer to that is there certainly are fees that are associated with it, including the cost of the charter, which is significant at $10 million. It's when you start looking at that, that can be a barrier. I can tell you that I think the industry and particularly the industry associations worked in concert with the department to really help with this language. I think everyone wants to, it's one thing to be a leader, it's another thing to maybe walk before you run. And I think there's concern that although stablecoin is significantly different asset than cryptocurrency, okay, and crypto has taken a pretty good beating here recently. This is not crypto itself, but this is a digital asset. And there is assets behind these digital assets in these depository institutions. So I think the purpose here is really to recognize the fact that out-of-state banks can come into the state today and open up these facilities. So it makes sense that we have state laws that would also allow for in-state banks to not only offer these products, but also we have regulation that's consistent for all of the players in this space, and that we provide safety to the public. I think as you read through the bill, you'll see that there's significant disclosure requirements in terms of making it clear that these assets are not backed by FDIC. I think that's a big concern of a number of community banks across the state, and that we don't want to run into a situation where somebody stumbles and the banking industry takes a black eye. So I think that's why there's a significant amount of caution in terms of how this gets rolled out. But there's also a reality by the industry that we need to keep moving forward and getting language and getting this set up to where it will work. And there are players that want to be in this space. The other thing we're making certain is that all players in the state of Nebraska that are community banks today, commercial banks in the state today, and credit unions could play in this space as well.
Thank you.
All right. Any additional questions? Seeing none, thank you, Senator Jacobson.
Thank you.
Proponent testimony for LB 674. Hello again.
Good morning once again. Chair Slama, members of Banking, Commerce, Insurance Committee. My name is Kelly Lammers, Kellylammers. I am Director of the Nebraska Department of Banking and Finance. I'm appearing today in support of LB 674, which was introduced at the request of the department. LB 674 proposes updates to the Nebraska Financial Innovation Act and related statutes. The act was originally adopted in 2021 by LB 649, which allowed for the creation of digital asset depository institutions and digital asset depository departments within banks, provided for the chartering, operation, and regulation of such institutions and departments. The department is the designated supervisor of digital asset depositories. LB 674 proposes a series of clarifications and textual improvements necessary now that the department and related industry participants have had time to work with and become familiar with the act. I will highlight some of the specific provisions of the bill. The Nebraska Financial Innovation Act authorizes digital asset depositories to branch into other states, but omits any reference to in-state branches. Under Section 7 of the bill, in-state branches will be permitted as well with the approval of the department. The application process is revised to clarify that the submission of a business plan is part of an application, is applicable to applicants for both the institutions and departments, and to establish the authority of the department to require the injection of additional capital by a bank which is applying for a digital asset depository department, to provide that bylaws and bylaw amendments are to be filed with the application, and to make clear that a charter will not be issued until all conditions precedent in the director's order have been satisfied. These changes are in sections 11, 13, 14, and 18 and reflect existing provisions in other Financial Institutions Act. Sections 3, 21, and 26 also contain revisions to comport the act with other institutions' laws. Section 21 amends the law requiring a digital asset depository furnish a surety bond or pledge securities to the department to cover the expected cost of liquidation or conservatorship if such should occur. A process for the substitution of securities patterned on the Trust Company Act is provided along with the right of the pledger to collect interest or dividends on the securities if the institution is solvent. Under Section 3, depositories would be assessed the same fee as trust companies and money transmitters pledging securities. Section 26 amends 8-3030, which authorizes the removal of digital asset depository insiders by the department to provide that endangering the safety and soundness of the depository is an additional cause for removal. There are a number of provisions in the Act requiring clarification as to whether the particular law applies solely to the digital asset depository institution or to the digital asset department or to both. For example, Section 2125 provides necessary clarification regarding voluntary dissolution and liquidation procedures between institutions and departments because the fundamental structures of the two differ. LB 674 limits the voluntary liquidation and reorganization process to institutions and adds language to permit financial institutions operating a digital asset depository department to surrender the department charter upon compliance with the statute to the extent determined by the department by rule or order. The many cleanup provisions of LB 674 include revising the definition of stablecoin to provide that it is a controllable electronic record to comport with other defined terms in the Act and Title 12 of the Uniform Commercial Code, and replacing language regarding the term grants of authority with the word charter, so that language in 11 sections of the Act and 3 banking laws reflect the long-established regulatory title for certain financial institutions. LB 674 will make the Nebraska Financial Innovation Act consistent within itself, more complementary to existing laws, more understandable, and textually correct. The department worked with the Nebraska Bankers Association to make all the corrections and clarifications within LB 674. We thank them for their assistance and endeavors to make Nebraska possibly the most attractive destination for those pioneering a new path of financial inclusion and technological sophistication with electronic controllable records. I want to thank Senator Jacobson for introducing 674. Be happy to answer any questions.
Thank you, Director Lammers. Are there any questions from the committee? Seeing none, thank you very much. Additional proponent testimony? Good morning again.
Good morning, Chairperson Slama. See me one more time on it today. Members of the committee, my name is Robert J. Hallstrom, Hallstrom. I appear before you today as registered lobbyist for the Nebraska Bankers Association in support of LB 674. I'd also like to thank Senator Jacobson for introducing the bill and the department for working with the Bankers Association in making these, what I would suggest are purely technical amendments to the digital asset depository legislation or the Nebraska Financial Innovation Act. Senator Bostar, in response to your question, more generally, I don't think there's anything in this legislation that would inhibit the continue or the potential growth of this industry in Nebraska, either from the banking industry perspective or those who want to be digital asset depository institutions. The basic premise of the need for amendments is probably predicated on the fact of how cumbersome the bill is, in that it differentiates between digital asset depository institutions, which are those that are of the non-bank related entities, and digital asset depository departments, and the fact that the two of them combined, when provisions apply to both of them, are digital asset depositories. Because of the terminology, we discovered a number of provisions when LB 649 was originally being considered. We had proposed those for consideration by Senator Flood. Those of you who went through the LB 649 process probably remember that Senator Flood was done with amendments at some point in the session, and perhaps rightfully so. We knew that additional technical amendments would be needed. We actually proposed those to Senator Flood last year, and he said he wanted to give it a rest for a year, and we complied with that request. We're not bringing the bill just because Senator Flood is not here. I think these are purely technical. Hopefully that's the case. That is the intention, and we support the bill for those reasons. Be happy to address any questions.
Thank you, Mr. Hallstrom. Are there any questions from the committee? Seeing none, thank you very much.
Senator.
Additional proponent testimony. At least we're consistent. Good morning again.
Good morning, Chairwoman Slama, members of the committee. My name is Dexter Schrodt, DEXTERSCHRODT, President and CEO of the Nebraska Independent Community Bankers. We would agree that this is merely a technical cleanup bill. It harmonizes pieces of the statutes so that everything gets along nicely. We would thank Senator Jacobson for bringing the bill, and thank you to the department for working through this. I know some of these issues came up in the regulatory hearing last fall, so we appreciate the recognizing that some changes were needed to harmonize. And we do have full faith in Director Lammers heading up this operation, Senator Bostar, so that Nebraska can be the destination for this. His diligence is greatly appreciated in this subject area. So with that, we would urge its advancement to general file.
Thank you, Mr. Schrodt. Are there any questions from the committee? Seeing none, thank you very much. Additional proponent testimony.
So you have a
Good
new
morning.
testifier.
I know, Mr. Quandall, you're
Cheers.
mixing it up.
Chair Slama, Vice Chair Jacobson, and members of the Banking, Commerce, and Insurance Committee. My name is Mark Quandall. It's Quandahl. I'm with Dvorak Law Group, with offices in Hastings, North Platte, Columbus, Sutton, and Omaha, Nebraska. Dvorak Law Group represents Telcoin, which is a digital asset company with its headquarters in Norfolk, Nebraska. And I'm here to testify in support of LB 674. Just a little history. In 2021, I had the honor and the opportunity to work with Senator, now Congressman Flood, on digital asset legislation for Nebraska that became the Nebraska Financial Innovation Act. That act came out of the Banking, Commerce, and Insurance Committee on an 8-0 vote with help from Chair Slama, Senators Bostar, Senator Aguilar, that were on the committee at that time. It later passed on final reading with 46 votes in 2021. And so the Nebraska Financial Innovation Act, it actually had two components. It enacted the Uniform Commercial Code provisions on controllable electronic records. And you saw updates to that last Monday in this committee in Chair Slama's LB 94. And then also too, it created the regulatory framework for digital assets in the state of Nebraska. And you saw proposed updates last Monday, LB 214, and today with LB 674. And the overarching aim that Senator Flood had with the Nebraska Financial Innovation Act was to provide regulatory certainty in the area of digital assets. And as with most industry, regulatory and legal certainty is important, which is why we support this legislation brought forth by Senator Jacobson. At the same time, we're urging caution. We need to be careful about the message that we send with any bill that may impede the good work that's already in place. The Nebraska Financial Innovation Act allows Nebraska companies and Nebraska community banks to take advantage of the nascent, emerging digital assets industry. I represent Telcoin, so it's probably best to tell you what Telcoin is not. Telcoin is not a digital asset exchange. It's not a Bitcoin miner, right? It's not a creator of Dogecoin, Shiba Inu, or any other sort of cryptocurrency with a floating value. Telcoin, succinctly, it's a digital asset. It's a technology payments company that creates stable coins, which is a digital asset with a value tied to a physical asset. In the case of Telcoin, 1-to-1 with the US dollar. The Telcoin app and Telcoin stablecoins have the potential of greatly reducing the friction and the cost of payment remittances for the consumers. So Telcoin has positioned itself to support a filing of an application with the Nebraska Department of Banking and Finance for authority to operate a digital asset depository. And so I want to thank Director Lammers and the Department of Banking and Finance team for their guidance as we navigate through this process, because it's new. It's new. So late last year, there were hearings on rules to implement the Nebraska Financial Innovation Act. The application has been finalized, and I can tell you as a certainty that Telcoin wants to facilitate the filing of an application to kind of operationalize the Nebraska Financial Innovation Act. But the issue before us is bigger than Telcoin. The Financial Innovation Act helped Nebraska become one of the first states in the nation to embrace the fintech world that's everywhere, which was and continues to be Congressman Flood's intent with this. As a matter of fact, Congressman Flood called me up last week. He notices, he still watches the legislature. And so he wanted to get my take on this bill, and then also to kind of express what he was thinking. And he wants to make sure that Nebraska is at the forefront of this industry. And we must be reminded that the premise behind the original legislation was to retain and attract young talent to Nebraska who are excited about this industry and want to be where the action is. And so with that, I'll end my testimony and answer any questions that you might have.
Thank you very much, Mr. Quandall. Are there any questions from the committee? Senator Bostar.
Thank you, Chair Slama. Thank you, Mr. Quandall. It's good to see you. It's been a little while.
Sure.
I'm going to ask you the same question I asked Senator Jacobson. Do you see anything in the legislation that would discourage the development of digital asset depositories in the state of Nebraska?
Well, the overarching thing is it does authorize them in the state of Nebraska, which is a good thing. There are a few things, that I think there was some discussion on $10 million capital requirement, which is a pretty high capital requirement for starting a business. As a matter of fact, it's a heck of a lot more than the statutory requirement for starting a bank in the state of Nebraska. So that's one. There's a filing fee of $50,000. That filing fee of $50,000 is a lot higher than most any other filing fee, right, in the state of Nebraska. And so there are things like that that may discourage a startup, right, from looking at the state of Nebraska. But overall, the bill's a good thing. Overall, the Financial Innovation Act is a good thing because it operationalizes, it allows digital asset depositories to be created in the state of Nebraska.
Thank you.
Thank you, Senator Bostar. Are there any additional questions from the committee? Seeing none, thank you, Mr. Quandall. Additional proponents for LB 674? Seeing none, are there any opponents to LB 674? Seeing none, any neutral testimony? Okay, for the record, there are no letters on LB 674. And Senator Jacobson, if you'd like to close. That's good. Senator Jacobson waives closing, and we will close out the hearing on LB 674. I will turn over the chair to Vice Chairman Jacobson for my hearing on LB 67.
Okay, thank you, Chairwoman Slama, and we'll open the hearing on LB 67. Welcome to your committee, Chairwoman
Thank you very
Slama.
much. Good morning, Vice Chairman Jacobson, members of the committee. My name is Julie Slama, Julie-Slama, and I represent District 1 in Southeast Nebraska. Today, I'm here to introduce LB 67. This is a simple bill. It would amend Nebraska Revised Statutes 84602, a law that identifies existing duties of the Nebraska State Treasurer. Specifically, this bill adds an additional requirement for the state treasurer to ensure that the money deposited by the treasurer's office with the financial institutions not be used for social or political causes or objectives. Nebraska's taxpayer dollars should not be used to further political or social agendas. Those dollars must only be used for the limited and specific purposes for which they are collected. LB 67 ensures the current state treasurer, who is here to testify today, and future state treasurers to maintain neutrality when handling taxpayer money. Thank you, and I am happy to answer any questions you may have.
Questions from the committee? Okay, if not,
Thank you very much.
Are there any proponents for LB 67? Treasurer Morante, welcome.
Thank you for having me. My name is John Morante, Johnmurante, and I am here as your Nebraska State Treasurer. I want to thank Senator Slama for introducing this bill. As she said, I think it's a pretty simple bill. If you'd have asked me 2 years ago, I would have said this bill is probably unnecessary. I suspect if we brought in Treasurer Stenberger Osborne, they would say this bill goes without saying. Why would we want the state treasurer to be politicizing public funds? And I want to also make sure that we have currently 46 banking relationships with the state treasurer's office. I'm not concerned with the banks we are contracting with our banking relationships or we're not trying to solve a problem in Nebraska right now today. But there is over the last 2 years, there has been a growing trend of trying to use state capital resources for political purposes, going around the legislature and even going around Congress to try and say, just call the state treasurer. The treasurer is the one with all the money. Let's have him make political decisions, him or her make political decisions and not decisions based on the best financial interests of our constituents. And there are now even candidates who are openly running for state treasurer across the country who are saying that is why they are running, is to use the power and influence of the capital they have under management for political causes. So while I don't believe that we have a problem in Nebraska right now today, it is clear that there is growing pressure on state treasurers across the country to make political decisions and not financial decisions. I want to make clear that this is not intended to limit a financial institution's ability to participate in social or political activities. What they do, what a bank does with their money is not what I'm attempting to address here today. What we're trying to say is the assets that are under management, both by the state treasurer and the financial institutions that we contract with, that those public funds cannot be politicized. And the message is really simple. If you want to use taxpayer dollars for a political purpose, the right solution, the office holders to go to are the legislature. Introduce a bill, get it signed by the governor. I will be happy to write the check to wherever you tell me to send the check to. That's fine. That's not what I'm trying to get at. And I also want to be clear, I'm not trying to give the treasurer's office any authority it does not already have. Right now, the treasurer can do an analysis of our banking relationships. And if the treasurer comes to the conclusion that dollars are being politicized, the treasurer has the authority to end that banking relationship. We just want to make sure that going forward, these loose ends are tied, that nothing is being politicized. I understand there's some concern about the language as written, that maybe we might be exploring some unintended consequences. And I've been working in good faith already to try and come up with mutually agreed upon language. I'm happy to continue working in good faith to find a compromise. And I think we'll get there. But I think this is good legislation. I think it's important. It's maybe a little belt and suspenders, but I think that it will put the state in a safer and better direction going forward. So thank you for the opportunity.
Questions from the committee? Senator Bostar.
Thank you, Senator Jacobson. Thank you, Mr. Treasurer. I appreciate you testifying as to trying to address why this is needed, but I still, I guess, don't understand. I'm trying to imagine the scenario that we are trying to protect against. Is the scenario that you feel that you're going to get a phone call from someone who says, please put all of our money into XYZ, and you won't, you're afraid you'll be persuaded by that and you're going to do that and imperil the funds of the state? Or what are we worried about?
Well, I'm not concerned about me doing that. I would say, I think it definitely needs to be clear in the law that when we're establishing banking relationships and how those dollars are being deposited, that we ought to be clear that that can't be done for a political cause or social cause. That's what we're trying to do.
So if you're our treasurer, which you are, and you aren't even worried about you doing these things, the person that we would be restricting in this case, shouldn't we wait for a situation where we have a concern? It seemed, I mean, I understand that the idea is to be preemptive, but it's sort of hard to imagine we're going to get to a point where this is necessary. And then I wonder why are we doing this?
Sure. So I'm happy to answer the question of why do we think we should wait until there's a problem and then address it? And my humble answer to your question is absolutely not. We have a whole litany of laws of how public funds can be handled already. We didn't wait until there was mismanagement of funds by the state treasurer's office or wait until there was a problem. We understood that we're talking about taxpayer dollars. We need to be preemptively and aggressively ensuring that those dollars are protected. And when there is already pressure on treasurers across the country to do these sorts of political activities, it seems to me that tying this down, it's not like I came out of nowhere with this idea that state capital should be politicized. As I said, I didn't see this as a problem 2 years ago, but it's a growing narrative that's happening today. So yes, I think action is appropriate.
I think my concern is if we're not solving a current problem that the state is facing, because as you've asserted, you're perfectly capable of resisting any of that kind of pressure that may come your way. And the language here is fairly vague. I would be worried about, in an attempt to preemptively solve a problem, to then create a current one. But anyway, I appreciate your time. Thank you very much.
Thank you.
Are there questions by the committee? Senator Ballard.
Thank you, Mr. Vice Chairman. Thank you for being here, Mr. Treasurer. I know you said there's pressure around the country. Can you provide an example of hypothetical or something that's actually happening within a other state's treasurer's office?
Sure. So I'll preface this by saying Nebraska is unique in the duties and responsibilities given to the state treasurer. And every state operates its public finances very, very differently. So it's not a little bit difficult. It's impossible to create an exact apples to apples comparison because the offices are so different. But what you'll see is treasurers who will state sort of affirmatively that they will only bank with institutions who are committed to certain political objectives. And that's just the sort of thing that I don't think we should be engaging with at all. That's how we operate right now. I don't know the ideology of the boards of directors of all of our banking relationships. We don't even ask. It doesn't matter. But that does happen, and it's happening at an increased volume.
Thank you.
Other questions from the committee? Yes, Senator Von Giller.
Is the issue that a financial institution might potentially have motives other than protecting the value of the deposits that are placed there? Is that what we're trying to avoid? Is that the challenge?
I think that's part of it, I suppose.
Okay.
I think the real problem is that The concern is a treasurer using the primary concern is a treasurer using the office to have the power of public funds used to accomplish some alternative goal. Whether a financial, as I said kind of previously, if a financial institution wants to engage in political activity, that's not the concern. Of course, that would not be problematic. But while our funds are there, it seems to be needs to be a protection that they aren't used in a way that could be perceived as political or so.
So as you note, a financial institution has every right to engage in political activity, support certain causes that they're passionate about. So what you're trying to avoid is the treasurer's office steering state funds towards institutions that might be leaning in different directions. And again, other than I'm trying to drill into the bottom of the risk here. The risk here is that those motivations could potentially harm or deplete the value of our deposits in that institution, or further causes that are not in alignment, that are out of alignment.
So I haven't thought through fully the dollars could lose value.
If a private financial institution says that we want to support a cause that is contrary to their initial motive, their primary motivation, which would be growing the value of their stock and the value of their deposits. We see it all the time. Private institutions that donate to certain causes at the expense of their shareholders. Well, as a depositor, we're not exactly a shareholder, but in a way we're a shareholder. So it would deplete the value of our deposits or potentially put our deposits at risk. Is that a challenge that we're trying to avoid here?
It could be. That's not the primary motivation of the bill. Most of what we're talking about here are checking accounts. So I'm not sure the value would go down necessarily. I need to vet that out a little bit.
Okay.
I need to think that through a little bit more before I give you a definitive answer. But it's a higher level of the politicizing of public funds that is happening out there, and trying to, even if it's profitable, that leave it to the side, just go to the legislature if that's how you want taxpayer funds to be used.
Thank you.
Other questions from the committee? Yes, Senator Duncan.
Thank you, Senator Jacobson. And I apologize for coming in the middle of your testimony. I was introducing a bill elsewhere. So I apologize if I'm asking a question that's already been addressed. Just looking at the language of this, it strikes me as very broad. And so if this requires the treasurer to ensure that money deposited is not used by financial institutions for social or political causes, I guess what I'm trying to get at is, does that create a proactive requirement that they then go out and actively dissuade these institutions from doing that? How do you ensure that money deposited is not used for these? Is there some oversight that they have to do with every institution this money goes into? Is there proactive conversations that have to happen to say, hey, don't do this? What does ensure mean? How does one go ensure that?
And I think that's a reasonable question. I suspect every state treasurer who would be granted this authority would probably handle things a little bit differently. It's obviously not explicit as to this is how a state treasurer is to ensure that public funds are not politicized. This copy of the bill just doesn't go into that level of detail. So it does provide some authority to be more or less aggressive, I guess you could see, in how a treasurer is ensuring that our tax dollars aren't being politicized. So I don't know if that answers your question, but it is true that the bill language as it exists is not explicit on that front.
And so you also concede, I guess, or agree with Senator Von Gilleren's point, these financial institutions, these private entities are able to continue to engage in whatever social or political activity they choose to act, correct?
Correct.
And so it's just up to them then to ensure that that money is not used for those?
That the public funds are, yes, that if you're taking a state deposit, you can't use that deposit for political purposes, yes.
I guess I just have concerns about what the word ensure means in there and what actions that actually requires. And so can you give me an example of what you would see somebody do to ensure that money deposited is not used for social or political causes?
So in our office, the Treasury Management Division works with our financial institutions every day to see what's going on with And we, like I said, we have 46 bank accounts, 46 financial banking relationships. So they're monitoring and having discussions with the banks that we contract with every day already. So to me, it's not like an expansion of the conversations that aren't already going on. We're already working every single day to make sure that dollars are protected and not mismanaged. This just adds a more specific for usage for political and social purposes to the mandates that we already have in the protection of public funds.
Okay, thank you.
Senator Bostar.
Thank you, Senator Jacobson. Thank you again. Who decides what a social or political cause is under the statute? Whose determination is that?
The state treasurer.
So we're implementing the statute to restrict the state treasurer, but ultimately it would be the state treasurer that could decide whether or not something was political or social. So I mean, I guess that's where I'm confused. We're worried about not yourself, obviously, but a future state treasurer deciding to use public funds in a political way. But ultimately, they would be the one that would decide what political meant.
No, I don't know that. I don't think the answer to that question is yes. What I think is the interpretation of state law is delegated to the Attorney General. So if the Attorney General were to say that the state treasurer has a duty and obligation to ensure that public funds are not being used for social or political causes, then to me, that's the answer to your question. Is the state treasurer is involved in statutory interpretation. We just follow the law as we see it. And if the Attorney General says, ultimately, this is how the law is applied, that's how we go on his decision. And there have been instances, and I can give you a lot of examples of instances where the state treasurer's office has been given a duty and responsibility, has operated in good faith. I don't think anyone's argued over the years that there's been a bad faith actor, at least not in a very long time. And the Attorney General just disagrees. That's not what this law says. And that's how we operate the process.
So this isn't in any way trying to influence what a financial institution would do with their deposits.
With the financial institution's deposits?
Well, so if you deposit state money into a bank,
Mhm.
the bank doesn't have to hold all of it. They can take that money and use it to make investments, right? They have to hold a percent in reserve. There are requirements to make sure that they're capitalized and have liquidity. Mm-hmm. But they can utilize the deposited capital for investments if they wanted to. So is this putting restrictions on what they could do with the deposited funds?
Would it put restrictions on what they could do with the state's public funds? I think the answer to that is yes. What I'm currently working through with Senator Slama, staff, Nebraska Bankers Association, is making sure that this does not get into an unintended consequences sort of situation, that we really are narrowly focused to a very specific issue. So I fully anticipate that there will be an amendment before you at some point today. It is not the day where we've got 100% agreement, but I think we're getting close to making sure that we're really tying this down to a narrowly focused solution.
Well, I appreciate that. So I'll, for the moment, I'll ignore the language in front of me and just ask the questions based on the intent that we're trying to achieve. So if the state were to put $10 million into a bank account at a bank, which would give the bank access to X percent of that for investment purposes, we would want to be able to verify somehow that their available pool of money that they could use to invest to make better returns. And if they put that into, let's say, something that the Attorney General thought was political, we would want to be able to claw that back, or we would just close the account. How would we? what does this look like in practice? What we're trying to get to?
So yes, and this goes back to this bill doesn't really grant the treasurer's office an authority that doesn't already exist, because right now today, if a bank came out and said, if you deposit money with us, we're going to use it for political causes, the state treasurer can say, well, that's fine. It's a free country, but we're going to close our account with you. So that can happen today. So I don't think this bill really deals with that particular question. It just kind of, it requires the treasurer's office to ensure that that does not happen.
Okay, well, I thank you again. I look forward to seeing the amendment. Thank you.
Okay.
We'd like to welcome Senator Kalf to join the committee, and Senator Duncan, who you've already heard from. Well, there wasn't a break. Other questions from the committee? I just have one, and I think it may be more clarifying listening to the discussion here. First of all, as we recognize, anyone brings a deposit into a bank, this is some bad news for some people that think we keep their money segregated. We don't. So it all gets mixed together, okay? And there's a pool of funds. And so I think really what the intent of the bill is, from what my understanding is, we want to be careful about those firms that might be out there that are specifically publicly stating that they're going to be investing only with, say, ESG scored companies that have high ESG scores. I think that's the heart of what this bill goes to. And it's not, and so if there's state money there mixed with all the other money, then that money is going to some firm in that regard. It's not talking about highest return necessarily, because there's a lot of factors that go into it. What I think the bill is after, from what I read and what I'm sensing, and what I think ultimate amendments will get to, is that we don't want to see the state money going in to a firm that's publicly stating that their objective is, here's where we're going to invest a lot of our dollars. And I think that's maybe the heart of what it is. I may be wrong, but I think that's what I'm seeing. And I think the fact that you're using caution to make sure that we make sure there are no unintended consequences is wise. I think when we go down this path, we want to make sure that we've looked at the collateral damage that could occur, but yet hit the mark on what is a growing problem. And I think many across the state are concerned about. And so I applaud Senator Slama for bringing the bill, and for you working with her on it. And I'm looking forward to the amendments that will likely follow to get us to the points we want to get to.
Thank you.
Other questions? If not, thank you for your testimony.
Thank you all.
Further proponents? None? Anyone like to speak in opposition to the bill? Mr. Holstrom.
Vice Chairman Jacobson, members of the Banking, Commerce, and Insurance Committee, my name is Robert J. Holstrom, Hallstrom. I appear before you today as registered lobbyist for the Nebraska Bankers Association in opposition to LB 67. I'm also handing out some amendments to the committee that we've discussed, that Senator Moranti had, or Treasurer Moranti, excuse me, had recommended or suggested in his testimony were being considered by his office. While we are here in opposition, quite frankly, I had neutral testimony if we had agreed on the amendments. So hopefully that's how close we are to getting this issue resolved. We have shared the proposed amendment that's being distributed right now with Senator Slama, legal counsel for the committee, and Treasurer Moranti. And we believe that the amendments carry out the intent of the bill as Treasurer Moranti has indicated in his testimony. Again, I think I just want to reiterate for the record, it's our understanding from visiting with Treasurer Moranti that the objective is that the state treasurer not use the bully pulpit of his or her office to influence or direct the use of state money to promote a particular political or social agenda. And the amendments that we have submitted to the committee would match the language of the bill to its intended purpose. State regulators should not be allowed to impose their political will or predilections upon financial institutions based upon their authority to make or withhold the deposit of state money for the purpose of directing or influencing the use of such money to promote social or political causes or objectives. Environmental, social, and governance legislation is proliferating across the country. The banking industry has general concerns and objections with these measures, which, similar to LB 67 as introduced, restrict the freedom of a financial institution to make its own lending, investment, and other business decisions in determining the type of businesses they want to serve. We also have a number of specific concerns with the vagueness of LB 67 with regard to the banking activities that would be impacted and how its provisions would be enforced. Specifically, the bill would place restrictions on the manner in which state money deposited by the state treasurer may be used. As Senator Jacobson noted in his question, financial institutions receive deposits from a variety of sources: state funds, local political subdivision deposits, and deposits of private customers. They are not separated or segregated in any form or fashion, and as a result, under the bill as written, a financial institution would not be able to ascertain whether it is using state money for social or political causes or objectives, or for any other specific purpose for that matter, whether it's lending, investing, making a charitable contribution in its community, or making a contribution to a political candidate. We're also concerned with what constitutes a social or political cause or objective under the bill. Is a financial institution holding state money which makes loans to the fossil fuel industry or green energy industry using state money for a social or political cause or objective? Similarly, if a bank holding state money makes a loan to a political candidate, is it using state money for a social or political cause or objective? Nebraska financial institutions make decisions every day based on their business interest. These business decisions are made with the primary goal of return on investment. Environmental, social, and governance risks are not considered separately or exclusively by financial institutions, but are embedded in the totality of risks assessed, monitored, and mitigated. The proposed amendment would require the state treasurer to neither direct nor influence the use of money deposited by the state treasurer in a financial institution for social or political causes or objectives. In closing, the fundamental principles that have existed for as long as I have been involved with the banking industry are that financial institutions should be free to lend to, invest in, and generally do business with any entity or activity that is legal without government interference, and that conversely, financial institutions should be free to choose not to lend, invest, or otherwise engage as long as they do not violate statutory, regulatory, fair lending, or anti-discrimination laws. For those reasons, while we are opposed to the legislation with the amendment that we have distributed to the committee adopted, we would remove our opposition from the legislation. Be happy to address any questions that the committee might have.
Senator Bostar.
Thank you, Senator Jacobson. Thank you, Mr. Hallstrom. Based on Senator Jacobson's interpretation of the language in the bill, so I'm trying to work my way around this. It seems as if the objective would be that the state couldn't put its money into a checking account in a bank if that bank says we are going to make investments into an ESG fund. Is it possible for there to be a profit-driven motive for a bank to want to invest in an ESG fund?
Well, there certainly could be, Senator, and I would suggest that we would probably not want that to be the purpose or objective of the bill. Our understanding from some pretty extensive, I'm not sure whether those of us who worked yesterday yet know who won the NFC or AFC championships, but we spent quite a bit of time. Our understanding on the bill is that it's designed so that the treasurer is not directing or influencing in any manner how a bank is using their funds. So we would not envision that the state treasurer would be, Senator Duncan suggested going out and soliciting information on what banks are or aren't doing specifically in making decisions on whether to place money with a particular bank, but rather not using the office to direct or influence what the bank should or should not do with those funds.
Thank you very much.
Further questions from the committee? Senator Duncan.
Thank you, Senator Jacobson. Thank you, Mr. Hallstrom. So to make sure I understand the difference between the proposed language of the amendment, and actually before I ask that question, let me ask this. Is this language just from you, or is this from a group of folks that have been working together? Where does this language come from on the amendment?
On the amendment, it comes from listening to what the state treasurer has indicated, Senator Slama have indicated is their objective underlying the bill. And quite frankly, it almost took their language and the committee council had sent us down this path. It's a slight variation from something that Mr. Cristalier had suggested, that it neither the state treasurer, that is, neither direct nor influence the use of state monies that are placed with these financial institutions.
So is it fair to say that the difference between these two, at least in my understanding, the language of the current proposed bill is more of a proactive duty that the state treasurer must ensure X, Y, and Z, whereas the proposed amendment is a prohibition. It's saying thou shalt not go do these things. One is a duty and one is a prohibition. Is that kind of the difference?
To a certain extent, I think more fundamentally than that, it's the use of it's the language in the bill as introduced that says the key is looking at how they are used by the financial institution. So rather than focusing on what the financial institution is, we flip that and say, based on the designed intent and objective of the bill, that the state treasurer shall not influence or direct how those funds are used.
Thank you.
Thank you. And
Further-
Vice Chairman, I might just indicate, and Senator Von Giller, and just to address your question, one of the differences that we have is a deposit or a checking account versus an investment, where a bank or an investment manager might have control of state funds and being investing them on behalf of the state, in which there are fiduciary duties, there are prudent investor rules, responsibilities, and so forth. So they're significantly different in terms of the objective of placing a deposit versus having someone manage the investments.
Further questions? Senator Kelf.
Thank you, Senator Jacobson. Thank you, Mr. Hallstrom. Does this amendment allow the treasurer to select the institutions? Because it says once it's deposited in the financial institution, the treasurer would not be allowed to influence how it's used. But does it still allow him to be able to select which financial institution he uses?
Yes and no. There are some statutes that obligate the state treasurer under the Nebraska Capital Expansion Act, for example, to put a certain amount of money in banks that are willing to comply with whatever the statutory or regulatory requirements are. In other statutes, there are indications that the state treasurer shall place in the state and national banks in the state, not in terms of a specific amount, but just to do so in terms of their funds. And obviously, they've got other investment or deposit opportunities beyond banks.
Thank you.
Thank you.
Further questions? All right. Thank you for your testimony.
Thank you.
Further opponents? Anyone else wishing to speak in opposition? If not, anyone wishing to speak in a neutral capacity? Seeing none, Senator Slama, would you like to close?
Since I'm staying in this chair anyways for the next hearing,
You're just being efficient.
absolutely. I would just like to note that obviously negotiations are still ongoing. There will be an amendment before you, before this is kicked out of committee, and we're looking forward to having everybody on board before we kick this out to the floor. So thank you very much.
Thank you, Senator Slama. We'll close the public hearing on LB 67 and move on to LB 68. And as you mentioned, that's your bill as well, so the floor is yours. It's open.
All right. Good morning again. Vice Chairman Jacobson, and members of the Banking, Commerce, and Insurance Committee. My name is Julie Slama, Julie-Slama. I represent District 1 in the Nebraska Legislature, and I'm before you this morning to introduce LB 68. LB 68 would increase the amount of liability coverage that must be carried by physicians, registered nurses, nurse anesthetists, CRNAs, and hospitals in order to qualify for excess liability fund coverage under the Nebraska Hospital-Medical Liability Act. Since 1976, Nebraska has benefited from the excess liability fund through lowered liability premiums for qualified healthcare providers, improved availability and affordability of healthcare, and a reliable payout to injured patients when a provider exhausts the limits of their liability insurance. This is how the excess liability fund works. First, only physicians, CRNAs, or nurse anesthetists, and hospitals may qualify for coverage under the fund. In order to qualify, the provider must file proof of liability coverage with the Department of Insurance. Currently, that coverage must have a liability limit of $500,000 per occurrence for all providers and an aggregate annual limit of $1 million for physicians and CRNAs and $3 million for hospitals. Second, the provider must pay a surcharge into the excess liability fund. This is what funds the excess liability fund. The surcharge is set annually by the Department of Insurance, and it is a percentage of the provider's annual insurance premium. The surcharge is capped by statute at 50% of the provider's annual premium. When a provider is qualified under the fund, their liability is limited to $500,000 per occurrence. Which means it is covered by their policy limits. Any judgments or settlements over that amount are covered by the fund up to the statutory cap of $2.25 million. So LB 68 would increase the amount of coverage required to qualify under the fund to $1 million per occurrence and $3 million aggregate for all qualified providers, hospitals, physicians, and CRNAs. This is the effect of both bringing additional surcharge into the fund because it will be based on a higher premium, as well as reducing risk to the fund because only amounts over $1 million will be paid out of the fund. We are working on a minor amendment to clarify that the fund is not responsible for paying first dollar or the first $1 million on a claim in the event a qualified provider exhausts their annual aggregate limit of $3 million. This really just clarifies current law, but we thought it'd be a good idea to avoid any uncertainty going forward. There are testifiers behind me who will testify about why we brought this proposal forward and why Nebraska must be vigilant to maintain a healthy excess liability fund. The underlying coverage requirements have been increased since 2004. Just a second. Sorry, this excess liability fund gets me kind of emotional. And one of the indicators that alarms me is that the average actuarially indicated surcharge over the last 5 years is 67.5%, meaning the fund has been underfunded for a number of years, up against the statutory cap of 50%. I understand there are concerns from some health systems about the costs, and I agree that we have to be sensitive to these concerns as hospitals and healthcare providers deal with the pandemic recovery, staffing shortages, and inflation. We may have to work more to achieve a little bit more consensus on this bill in reference to that amendment I was speaking about, but I do believe action will be necessary in the near future to maintain the health of our excess liability fund. The fund is a tool to help us recruit and retain healthcare providers in our state, and it is critical that we be proactive about maintaining it. I'd be happy to answer any questions you may have, though there are more qualified experts to speak on this issue behind me.
Questions for Senator Slama? I just have one. I think,
Yes, sir.
if I understand it, the real crux of this is there is an interest in raising the limit at the provider level so that we can actually preserve the fund, actually rebuild the fund, keep the fund solvent and in place, because the alternative would be much, much worse.
Yes, I think the key point of this, if you took away nothing from my testimony besides me hacking and coughing, is that the fund is underfunded. It has been for several years. We need to get it back to the point where it is fully funded, and this bill would achieve that end.
Perfect. Any other questions? If not, thank you for your testimony.
Thank you.
For introducing it, and I'll open it up to proponents of the legislation of the bill.
Good morning, Chairman Jacobson and members of the Banking, Commerce, and Insurance Committees. My name is Daniel Rosenquist, DANIEL-ROSENQUIST. I'm a family medicine physician in Columbus and the current president of the Nebraska Medical Association, which represents nearly 3,000 physician, residents, and medical students in the state. I would like to thank Senator Slama for introducing LB 68, which is incredibly important to the NMA. The NMA has been involved in the excess liability fund since the Hospital-Medical Liability Act was initially adopted in 1976. We have long felt the need to be good stewards of the fund, even when it means our own members must pay more to keep the fund sustainable. The impetus behind LB 68 began in late 2019 when the NMA engaged in conversations with the Department of Insurance in regards to the health of the fund. At the time, the actuarial analysis completed by the DOI showed that over the previous 4 years, the fund's assets had decreased by more than $8.5 million, which is roughly 9.2%. For the 5 years ending in 2019, the operating reserve suffered losses totaling $26.6 million. To put it simply, there was more money being paid out of the fund for claims than was coming into the fund in surcharge. The NMA has been actively monitoring the fund since since that time and staying in close contact with the DOI regarding its status. The fund's assets did rebound significantly in 2020 and 21, but much of this is due to the effects of the COVID-19 pandemic, which resulted in delayed procedures and slowed claims payout. At the end of calendar year 2021, the fund's assets did total $100.9 million. And while this may have bought the fund more time, it is dangerous to see the pandemic-related delay as a trend or an indication of the fund's stability. Despite fewer reported claims in 20 and 21, the 5-year loss ratio is still 138%. We recognize that this is not sustainable long-term. Throughout the second half of 2022, the NMA has been working with our partners to determine the best path forward to ensure the excess liability fund is healthy for years to come. Over the summer and fall, we've had many conversations with stakeholders, including the Department of Insurance, the fund administrator, the medical protective liability insurance companies and their agents, as well as affected providers, physicians, CRNAs, and hospitals. At the end of 22, the Department of Insurance had an analysis completed by an outside actuarial firm that showed that the actuarially indicated surcharge has been well over 50% for the last 10 years and as high as 84.9% during that time. As Senator Slama indicated, the surcharge is capped by statute at 50%, meaning the fund is currently being funded at a level well below what is indicated by the most recent actuarial analysis. By raising the underlying limit to $1 billion in qualifying coverage, LB 68 would bring additional revenue into the fund because the surcharge would be based on the premium for $1 million policy. Additionally, settlements and judgment won't impact the fund until they exhaust the $1 million policy limit. LB 68 would increase revenue and decrease risk, yielding a significant benefit to the fund's bottom line. While according to the fiscal note, the DOI was unable to estimate the amount of additional revenue, it was estimated that approximately $8.28 million less would be paid out of the fund over the next 2 years. We don't take it lightly what we're proposing that would result in more fiscal investment on the part of stakeholders. In talking with carriers, we understand that the current difference in premiums between a policy with underlying limits of $500,000 and that of a $1 million policy is roughly estimated to be between 16 to 20% increase for an individual provider. As a family physician in an independent practice, my associates and I will feel this increase in premiums, but I can assure you that I wouldn't be here advocating for this unless I felt it was not necessary for the long-term solvency of the fund. The underlying coverage requirement was last increased 19 years ago in 2004. Prior to that, it was raised in 1986, and before that, when the fund was established in 1976. Healthcare providers today benefit from the increase shouldered by fund participants in the past, and we cannot neglect our responsibility to do the same for the future of healthcare in Nebraska. We understand that Nebraska Hospital Association has concerns about the cost and the timing of making this change. We value our partner with the Nebraska Hospital Association, and those concerns are understandable. So we want to assure this committee that we will continue to work together to find the best path forward. Thank you, and I'm open to questions.
Questions? Yes, Senator Duncan.
Thank you, Senator Jacobson, and thank you, Doctor, for coming in today. Just a couple of questions that maybe you could answer, and if not, I can ask others if those folks might know. According to your testimony, I think you said the fund's assets were at 100.9 million as of 2021. Is that accurate?
I think that's accurate, yes.
Okay. Do you know what they sit at today?
I do not.
Okay. Do you know how much of the payouts generally go towards, I'm just going to use broad layman's terms here, injured folks versus attorney's fees?
I don't think you want me to answer that.
Just curious.
I would leave that to
Okay.
the attorneys because I couldn't answer that.
Okay. Do you know, my questions were all along those lines, so I'll wait for another testifier. But thank you for your testimony today. I appreciate it.
Other questions? I just have one. I think with regard to this change, assuming this bill would move forward, I'm assuming that we wouldn't see any changes in settlement requests or settlement amounts simply because we're just shifting, in this case, which insurance company or which fund is paying the tab. But there shouldn't be anything, in your opinion, that would shift and cause payouts to be greater because of somehow we've raised what the individual providers cover.
No, and I think part of that is obviously there are settlements at trial and settlements through negotiation, mediation, and that they would only take the difference between that 500,000 limit and the $1 million limit. That would be at the risk of the medical professional liability insurance companies rather than the excess liability fund.
And so the crux of this whole thing really comes back to the beginning. Are we going to increase that limit to protect the fund and have the providers pay higher premiums as a result of that? Or is there middle ground, or what do we need to do to protect the fund?
Yes, I think it's, to me, I feel like we should be good stewards of the fund. The long-term sustainability of the fund is very important to medicine as a whole. And whatever we can do to try and ensure that for as long as we can is our interest.
Thank you. Further questions? If not, thank you for your testimony. Further proponents?
Vice Chairman and members of the committee, my name is Beverly Razon, R-A-Z-O-N. I am the head of government affairs for COPIC, a medical liability insurance carrier who has been serving the healthcare providers of Nebraska since 2002. I was born and raised here in rural Kippahaw County and care personally and professionally about the well-being of healthcare in rural Nebraska. I am proud to be here before you today to weigh in on a bill that aims to ensure that one of Nebraska's most important tools to recruiting and retaining providers into the state, especially in those rural areas, remains well intact for years and years to come. I would like to thank Senator Slama for introducing this legislation, and thank you for allowing me the opportunity to discuss this bill with you today. COPIC is proudly endorsed by the Nebraska Medical Association, who shares our strong commitment to patient safety and ensuring access to quality care. As I mentioned, COPIC provides medical liability insurance coverage to the physicians and facilities that participate in Nebraska's patient compensation fund. Our ability to carry out our mission of improving medicine in the communities we serve depends in part on the viability of the excess liability fund, which was created by the Nebraska Hospital-Medical Liability Act. The bill aims to uphold the purpose of the act and the sustainability of the fund. The Hospital Medical Liability Act was designed to, one, improve the availability and affordability of medical professional liability insurance, to encourage physicians to locate and practice in Nebraska, and to improve the availability and affordability of medical services in Nebraska. The Act and the fund have done just that. Nebraska has long benefited from the Act, receiving recognition as the #1 medical environment #1 medical environment in the country last year, which factors physicians per capita, hospital safety, and tort reform. Nebraska enjoys some of the lowest medical liability rates in the country, and COPIC believes it shares the responsibility to keep these rates our expense on healthcare providers low. We share the desire to keep Nebraska an attractive place to practice medicine and not contribute to the costs that get passed on to patients. The act and the sustainability of the fund are critical to that balance, and this bill takes a step to ensure that the fund remains available for future providers. As you've heard, there is a real concern about the financial stability of the fund. Since 2012, the state's actuary has indicated that the percentage of premium that is paid by providers that goes towards the adequately maintaining the fund should exceed the statutory 50%. In 2020 and 2021, those indications were 10% and then 20% higher than that limit, meaning the fund was not adequately funded. This is concerning because within that time, the overall cap was raised, and we have seen a trend of increasing claims and suits since. Since 2012, Nebraska has experienced an annual average severity of claims that is well above the rest of the country. In fact, in 2021, Nebraska's average severity was nearly twice as high as the rest of the country. Due to this concern, these concerning severity trends and the limitations to adequately maintain the financial health of the fund, additional revenues into the fund are necessary right now. COBIC believes that increasing the underlying limit requirement will provide a twofold benefit to the fund. The first benefit will come by increasing the underlying limit. That increases the premiums, which the surcharge is based on, therefore increasing the revenue into the fund. The second benefit, as the fiscal note points out, it will reduce the volume of matters that hit the fund. Moving the underlying limit up to 1 million means that the primary layer of insurance will manage more matters. As the carrier for that primary layer of insurance, COPIC will remain committed to its duty to defend providers when the appropriate care is delivered and resolve matters quickly to provide peace of mind for the providers and not incur additional legal expenses. Vice Chair and members of the committee, it is COPIC's desire to provide the best insurance coverage to healthcare providers in Nebraska. Maintaining a predictable, stable liability environment is essential for everyone, especially patients and families who deserve access to caregivers. Recruitment and retention of caregivers in Nebraska is critical to that access. We must ensure the sustainability of the fund to keep Nebraska an attractive place to deliver care. Please support LB 68. Thank you.
Thank you. Questions from the committee? Senator Von Gillern.
You mentioned Nebraska's severity of claims is 2 times other states. Can you give a little bit of context to that? Did I hear that correctly?
Correct. According to Tiger Risk, which is an organization that looks at the National Practitioner Data Bank, they assessed Nebraska's to be about 800,000. I believe the average is about 400,000.
Any reason off the top of your head for that, or what's the common belief there?
I would say there's a theory of social inflation, and what's happening is we're seeing, maybe not in Nebraska, but in surrounding states, the value of liability claims continuing to increase. That is putting pressure on Nebraska as well. So there's certainly an idea that the value of these claims and suits are higher or just growing in value. When the cap was increased, I think that also put pressure up on the cost of claims.
Would this maybe have tied into the question that Senator Dungan asked earlier about the proportion of claims, how those are paid out, whether to the claimant or to the legal costs?
There's industry average, and this is an estimate, that about 33% of damages consist of legal fees. If they go to trial, that can go to 40 to 50%.
Thank you.
Further questions, Senator Dungan?
Thank you, Senator
I'll be
Jacobson.
shocked if you didn't have a question.
Sorry, it's Monday. I'm not tired yet. Just a couple of questions to follow up on some points. So you talked about the increase in the value of these claims spiking in 2021 in particular. Do you know, just generally speaking, was there a spike in these claims after the COVID-19 pandemic? Did we see a raise of those across the entire country, or is Nebraska a standout in regard to those increasing in that time period?
Well, one thing I also didn't mention earlier is that the cost of healthcare just increasingly gets more expensive over time, and that has also drawn up the cost of claims. So I wanted to mention that too. As it relates to your question on, is there a trend? There was certainly a trend in 2020 when COVID closed down the courts. And so what we're seeing is, to meet the statute of limitations, we're seeing a number of those come out and start getting processed through, getting processed, period.
So there was at least an increase nationwide in
Yeah.
those numbers. It wasn't just Nebraska.
Correct. And I think it was just a lot of holdovers as well as new claims coming out. And I would not pin them back on the pandemic itself.
Have we seen those numbers come down at all since 2021?
No,
They continue to increase?
correct.
Thank you.
Further questions? Senator Calf?
Thank you, Senator Jacobson. Do other states have this sort of excess liability fund? And how do we compare?
There are maybe a dozen states that have patient compensation funds. They all act very differently. Some have broad exceptions. Some have, they all act very differently. But I would say across the board, those funds help significantly in those states to keep liability premiums at a very balanced and affordable rate.
Further questions?
Vice Chair.
Oh, Senator Ballard.
Thank you. Thank you, Vice Chair. Thank you for being here. You repeatedly mentioned recruitment and retention. Is that something you're hearing from young professionals, or is this a trend across the country?
Generally in rural areas, that it is very difficult to recruit providers to rural areas. Nebraska has done an excellent job by keeping the cost to practice care in rural areas at a very low rate due to the fund and the act. I would say that retention and recruitment is constantly a concern and for providers across the country, but particularly I would say it's in Nebraska, it is a concern. We're seeing in rural areas, I come from Kippahaw County, there is no healthcare provider. We travel to, Boyd County and Cherry County to get that care, Rock County. So I think that recruitment of healthcare providers is a tough issue. And keeping them here is extremely important, especially when you might have a lower premium someplace else, or an opportunity to get more rates or reimbursement in another state and less expense. Because of the fund, we have been able to keep the cost to deliver that care and therefore the opportunity to have a great income in Nebraska. I think it's an attractive place to practice.
Yeah. And then just looking regionally, do other states around our neighbor states have a limit around this?
Kansas, I believe, has a fund. Wisconsin has a fund. And I can't think of all of the states, I apologize, that also have funds.
Perfect. Thank you.
There's about 10 to 12, I want to say.
Okay. Appreciate it.
Further questions? I guess I just have one. In full disclosure, I do sit on the board of Great Plains Health in North Platte, and I'm painfully aware of the challenges in the medical industry today, and particularly hospitals struggling to be profitable, particularly in rural Nebraska. And maybe this is a question for the NHA, and I'm guessing they'll be testifying along the road here too. But there has been a big movement for most practitioners now to be employed as opposed to running their own practices for a plethora of reasons, not limited to liability, but just the bureaucracy and all of those things that go with the process today. And they want to provide healthcare, not be administrators. So I'm assuming then in this plan, if they're an employed physician, the hospital's picking up this premium?
The physician and the hospital would pay into the fund.
Okay, even for the employed physicians?
Correct.
Okay, all right.
I'll let
I'm guessing
Your
Mr.
next
Hale will
witness
be up here to
also-
speak on that.
David may also be able to pay, but I am pretty sure that they would need to qualify for the fund individually.
Perfect. Thank you. Any other questions? If not, thank you for your testimony for the proponents. Welcome.
Thank you, Senator Jacobson. Members of the committee, my name is David Buntain. It's Buntain. I am a retired attorney as of January 1, but in a previous life, I was attorney and lobbyist for the Nebraska Medical Association for 28 years. And I was in fact involved in 1986 when we first came back to the legislature and asked that you raise the underlying requirements similar to what we're doing today. This is part of a goal, a commitment that the Medical Association made back in 1976 when this bill was originally passed, and that was to be a good steward of the excess liability fund in order to solve the problems that this law was enacted to solve. In 1976, Nebraska was facing a crisis, and Nebraska physicians were facing a crisis because the St. Paul Insurance Company elected not to write medical malpractice insurance in the state. And they, at that time, were covering more than 50% of the physicians in the state. And it was not just an issue in Nebraska, it was all across the country. And so you've had this wave of tort reform that has come then and then periodically since then, that's resulted in most states having some form of tort reform. There have been different approaches across the country. There have been several efforts to solve this on the national level that have never been accomplished. But Nebraska's solution was hailed as one of the better solutions. And the good news is it continues to serve the state well for the reasons that your prior witnesses have testified to. I prepared a handout. Some of the material has already been covered. I did want to point out a couple of things. Part of the basis of the act is the cap on liability. And in order to take advantage or be protected by the cap on liability, you have to participate in the excess liability fund. So what we're talking about here is the provider having a certain level of insurance, and then the state charges a surcharge on that to create the excess liability fund. And in the same way that we have worked to keep the fund solvent, we have also come to the legislature periodically to raise the cap. And it's been the providers that are protected, the Medical Association, the CRNAs, and the hospitals that have advocated for raising the cap. And I've got the history of the cap on the bottom of page 1. Top of page 2 shows the number of practitioners and hospitals that are currently participating. This number is a somewhat moving number, but I think this gives you a sense of the number of entities and individuals that are involved at this point. The next section is on the state of the fund. As mentioned earlier, there's about $100 million. The numbers tend to lag a little bit as far as the reports that we receive. This is the most recent number that we have, so I would expect it's still in that vicinity currently. The next number after the fund balance, I think, is kind of gives you an indication of why we're here today. In the last 9 years, the estimated liabilities have risen from roughly $19 million to $42 million. In other words, that's the amount that's reserved to pay existing claims. And that has dropped the operating reserve from $74 million to $59 million. We're not in a crisis now, but we're also
concerned about what the long-term effect of this is going to be. And so that's why we're here today, again, to be a good steward of the fund. The last page shows the history of the increases, starting with what the initial requirements were for the underlying coverage. We came in 1986. As I said, I was involved in that. And again, in 2004, it's been raised. And then the bottom shows the amount now. So we think that the Hospital-Medical Liability Act has served this state well. And I would be happy to answer any questions that you may have about the act or about LB 68.
Thank you. Questions from the committee? Senator Cal.
Thank you, Senator Jacobson. Hi there. For the $3 million aggregate, why is that number so much greater? If you look historically, it looks like your aggregate doubled, and then the next time it was raised, it was by about 1.6 times, but now it's tripling the aggregate. Is there a reason that that is going up so much higher than the pattern of the occurrence?
I'm going to have to say I was not involved in the
Wrong person, okay.
in the draft. Yeah, I have not been representing the Medical Association this last year, so you'll have to ask one of the drafters of that. But obviously you can have a situation where you have more than one occurrence in a year, and that's why you have an aggregate for that year. You're buying your policy for a year at a time, so that would cover up to 3 claims. And I think that may be one of the concerns the Hospital Association has, and that's something I think can be worked out. This was intended to start the discussion.
Okay, thank you.
Further questions from the committee? All right, if not, thank you for your testimony.
Thank you.
Further proponents? I thought we might be hearing from you today. Welcome to the committee.
It's nice to be here. Mr. Vice Chairman, members of Banking, Commerce, and Insurance Committee. My name is Eric Dunning. I'm the Director of Insurance. For the record, that's spelled ERIC DUNNING. It's been 20 years since the private sector's level of coverage last increased. At the end of the day, this bill adjusts that line of responsibility between the private sector and the public sector coverage for professional liability. The Department of Insurance is the administrator of the Excess Liability Fund created by the Nebraska Hospital-Medical Liability Act. The department oversees claims payment, sets the rates for participation in the fund, and monitors the size of the fund. The provisions of LB 68 raise the underlying insurance requirement, which healthcare providers must purchase from private insurers from $500,000 per occurrence to $1 million per occurrence, and increases the aggregate liability amount for healthcare providers other than hospitals from $1 million to $3 million. But it does not change the aggregate liability amount for the hospitals, and it doesn't change the $2.25 million cap on damages under the Act. These claims that exceed the level of coverage provided by private insurance are paid by the Excess Liability Fund. Our claims payments using the lower threshold have risen in recent years, as you have just heard. And the surcharge rate is currently at the 50% maximum allowed under the Act. It's been at this cap for at least the last 3 years. Our actuaries have told us that this is inadequate to meet the long-term liabilities of the fund. For example, the actuarial analysis shows the 23 surcharge should have been 61%. In 2019, the surcharge increased to 50%, but it should have been at 68% to cover the expected claims. That's remained true. Since 2020, the indicated surcharges were 64%. In 2021, 76%. 2022, 58%. On the retirement of the department's in-house employed actuary that covered the issue, the department needed to contract with an outside consultant to do this review. And the new actuary's first task was to peer review past analysis of the fund and come to an independent judgment. When that was completed, the independent actuary arrived at a similar conclusion. LB 68 proposes to decrease the liability of the fund by increasing the amount paid by private insurance. Raising the qualifying threshold to $1 million will reduce the claims that we must pay and increase the surcharge income. Again, these amounts were last changed in 2005. Over time, we anticipate that this will allow a decrease in the level of the surcharge as responsibility for claims shifts back to the private sector. It makes sense for insurers to write this higher coverage, and the department should not compete with the private sector. If there's a choice between the public sector or the private sector insurance providing this coverage, obtaining coverage from the private sector, we think remains the better option. It's clear that the amount of coverage provided by the state when combined with that 50% cap is not sustainable. It's important for the committee to be aware that while the fund resembles insurance, it isn't. The state has not assumed the risk of claims exceeding surcharges. If the balance of the fund is insufficient to pay claims when due, Nebraska revised statutes Section 442831 sub 1 provides that the state may levy a special surcharge on all providers currently participating in the fund and those who participated in the last 12 months. Over the last 45 years, fund participants have monitored the fund and proposed to update it as necessary. This responsible approach is essential to ensuring this fund continues to compensate Nebraskans for their injuries. Providers have historically recognized that this is their fund. The Department of Insurance administers the fund and tries to do so responsibly, but it is the provider's money. It's not state money. The department as fund administrator is here to alert the legislature about current trends so that it can adjust course responsibly. For these reasons, the Department of Insurance supports the proposed changes in LB 68. And with that, I would be happy to answer any questions. And Mr. Vice Chair, I would like to start with the question that you posed to an earlier speaker related to the issue of how these claims interact for employed physicians.
Great. We'll turn your light off and we'll let you answer that question.
Thank you, Mr. Vice Chair, for such an insightful question. The department literally signs up providers and hospitals to participate in the fund. So at the renewal date, we will get very large filings from hospital systems around the state. And that will come with a check that's provided by the employer. So it's our understanding that that's largely borne by the employer. If there is another arrangement that happens on the back end, that's not something that we would necessarily be aware of.
Thank you. I appreciate that clarification. Questions for Mr. Dunning? If not, thank you for your testimony.
Thank you, Mr. Vice Chairman.
Further proponents? Okay, seeing none, are there any opponents to the bill? LB 68. Seeing none, anyone wishing to speak in a neutral capacity? Mr. Hale.
Thank you, Vice Chair Jacobson and members of the committee. My name is Andy Hale, A-N-D-Y-H-A-L-E, and I am Vice President of Advocacy for the Nebraska Hospital Association, and I am testifying in the neutral capacity on LB 68. Protecting the continued solvency of the fund is something we all support, but to truly understand the impact of this policy change and the effects that it would have on our hospitals, we need to have further study. When we discussed this bill with our members, many shared concerns with increases in premiums. Nebraska's hospitals are facing the worst margins in decades, and it is estimated by some brokers and carriers that this proposal would increase premiums by anywhere from 20 to 60%. With historical inflation and our workforce crisis, Nebraska's hospitals are hurting. Without increases in Medicaid reimbursement rates, our hospitals will be forced to make some difficult choices. That could mean reductions in services that they provide, which would impact the communities we serve. And in some cases for our hospitals, they may have to consider closing their doors. Any increases to hospitals' premiums right now would impact their bottom lines. We appreciate the senator bringing this bill and really appreciate the hard work the NMA has done on this issue. And we're looking forward to continuing to work together on this. And we welcome an opportunity to collaborate with the state for further study, if so.
Questions for Mr. Hale? Yes, Senator Duncan.
Thank you, Senator Jacobson, and thank you, Mr. Hale. Just to reiterate, I know you've been listening to a lot of this testimony. The question I asked earlier regarding the breakdown of the payout from this fund with regards to how much is actually going to patients or clients and how much are going to attorney's fees. Do you know that or have an idea as to that at all?
I don't either, but I can see if we can try to work with our members to get an answer to.
I'm just curious with how much we're paying out, how much of that's going to actual people versus
An interesting question.
not the lawyers aren't people, but the actual patients.
Who have been
I know.
impacted.
Just curious if I could get that information. That'd be
Correct.
great.
We'll see if we can work with the others and get it for you.
Appreciate it.
Senator Calth.
Thank you, Senator Jacobson. When you talk about the 20 to 60% increases in premium, are those passed along to the consumers, the patients who are using the services, or is that something that the hospital tends to bear on its own?
Right now, I think we'd bear that on our own, but as the times get more and more difficult, Senator, unfortunately, we have to pass those somewhere.
Thank you.
Further questions? I guess I just have one. I guess you're speaking in a neutral capacity. Clearly, we've got an issue out there. Are you seeing some room for an amendment that would perhaps split the difference here somehow, or what are you seeing in terms of solution?
Initially, when we put this out there, we do have a policy development committee. And as we talked about this, we were at an oppose. We worked with our board and our president, Jeremy Nordquist, worked with the NMA and to really try to get us to a neutral. And that's where we sit now. We would love to see this continued studied more. We want to, and to the NMA's credit, they didn't bring this to the last minute to us, but as we've asked our members, I think they want to reach out to their carriers and do more of an in-depth study and a dive into this to see exactly what the costs are. Again, we're all on the same page. We want the fund solvent, but right now, when we're looking at our bottom lines, we just don't know how much this is going to cost until we break that down, and it's something that probably is going to take a little while before we can do it.
Okay, thank you. Any other questions? All right, seeing none, thank you for your testimony. Anyone else who would like to speak in a neutral capacity? Welcome.
Thank you, Senator Jacobson. I'm going to try not to damage state property. Senator Jacobson, members of the committee, my name is John Lindsay, Lindsay, and I'm appearing as a registered lobbyist on behalf of the Nebraska Association of Trial Attorneys in a neutral capacity. I think as Mr. Hale just said, everybody understands there is a problem. There is the fund is actuarially not sound and it does need to be addressed. Actuarially, it has to be addressed in a couple of ways, either reduce the long-term output or to increase the revenue. And that does, because the fund is statutorily created, it does need to statutory language change to somehow bring it up to date or bring it up to appropriate strength. We up here primarily with some of the questions and whether this will address it. First, the dealing with the severity of claims. I think that overlaps Senator Von Giller and Senator Duncan's questions about the attorney's fees. I can tell you on the injured person's side, those attorney fees can vary from 20 to 25% on up to, if it goes up on appeal, maybe 40% of what is paid to the victim.
But what we often don't look at is, there's an old story about a town that was too small to support a lawyer, but it could support 2 lawyers. You gotta have, you've got to have 2 sides when you are going to court. And so what's often forgotten is the attorney fees that are paid to defend the claims as well. And those, I don't think we have a number for that. I mean, I don't think the folks that have been here have a number for that, but when you talk about limits on policy, the first thing that's going to get paid out is that the insurer generally has a duty to defend. They have the obligation to come in and defend the claim. If you're in an auto accident and you are injured, the first thing that the insurer is going to do for you is to have an adjuster deal with the claim. And if you are suing or getting sued, if you are getting sued, to provide a lawyer to defend you. Those costs are covered within the policy limits of what the insurer has to pay out. So when we talk about severity of claims, for example, we don't know how much of that is paying attorneys and whether those could be adjusted to reduce the severity of claims, or as I believe was Senator Dungan was asking about, was that a peak after the pandemic? And I don't have the numbers to back it, but if you will recall, the courts shut down. They quit having trials. They stopped in the middle of trials and had to come back after the pandemic. So you can imagine that all that work that the courts would have been doing during the pandemic wasn't getting done. So it did increase the number of cases that had to be tried or that could be filed. And that couldn't get into what the severity of the claim is. And so it's a complicated issue. There's a lot of numbers. That you have to consider in looking at this issue. Mr. Hale talked about it could use more study, and we would agree with that. I should point out or make sure that you understand that the Medical Association reached out to us some time ago to present the problem and to try to work through to a solution. And we appreciate that. And you all should know that they have been trying to, I think, address the problem. There's another way to address that when we talk about trying to fill in that actuarial issue or actuarial weakness, is that we could change how the money goes into the fund. Obviously, increasing the underlying coverage is going to reduce the amount of claims that are paid out of the fund. Another approach could be, and I don't know if it's been considered or if the NMA ran numbers on it, but you could also increase that statutory cap on the surcharge that would increase the amount of dollars coming into the fund, and may also be a way to correct the issue. We just wanted to get some of those questions out there for you to consider. But we do agree with, I think, everybody who's testified that there is a problem and it does need to be addressed. And we're happy to be part of trying to be part of the solution on the issue.
Thank you, Mr. Lindsay. Questions for Mr. Lindsay? I just have a quick one here, I guess. Thinking about, you've got private carriers that are going to be insuring the hospital / providers.
Right.
And then you've got the fund. So if there happens to be a claim that's smaller, let's say that we move to, let's say that we're at the 500,000 and it's going to be a claim that's less than 500,000. Do we have 2 sets of attorneys for each that are coordinating? Do we just have, how does that work? And, or does, if there's a claim filed, the attorneys for the fund and the underlying insurance company collaborate? How does that work?
I'm not exactly sure, but I do think the fund has its own attorney to defend the fund, which is of course a different interest than the insurer.
Exactly.
The insurer has its interest is keeping the claim under 500,000 under current law. The fund does come involved. What I don't know is at what point. If it's when it reaches, what is it? It's 250 now. Is it when it reaches 200? Is it when it does it become apparent that the attorney the attorney for the insurer has to reach out to the fund and get them involved. But there would be both interests being defended.
And clearly, if there's a settlement above the 500,000, then obviously both have to be involved.
The fund has to approve
that settlement. Yes. All right. Thank you. Any other questions? If not, thank you for your testimony. Anyone else wishing to speak in a neutral capacity? If not, Senator Slama, would you like to close?
Very briefly.
I feel like I've taken over his chair. I don't know. It just feels weird.
You need to watch yourself there, Mr. Vice Chairman. Thank you so much for considering LB 68. I think everybody around the table sees that there's a problem. We're working to address it, and I'm happy to work with everyone involved for as long as it takes to get to a reasonable solution that serves both our healthcare providers and our hospitals as well. Thank you.
Thank you. This will close out the hearing on LB 68, and I will turn the chair back to Senator Slama.
So we're at an end of our hearings for today, but just a note for the committee that we will be execing after our afternoon hearings. So just be ready for that. So have a great lunch hour.